Good day and welcome to our second speaker event in our series. We're very privileged to have Richard Murphy, who has an extensive career as an activist and an academic. I suppose you became most famous with your book, The Joy of Tax, when it was actually mentioned by David Cameron in Parliament, the big moment. But Richard was part of setting up, there we go, the Tax Justice Network. He's written extensively on tax and a lot else. And today he's going to talk about tax after coronavirus, which of course is maybe gone slightly on the back burner with the budget not happening as such, but will presumably not go away as an issue. So I will leave Richard to tell us about tax after coronavirus. Thanks very much, Richard.
Thank you, Henry, and good morning, everyone. On a Thursday morning when we are waiting for an announcement from Rishi Sunak as to what he's going to do next with the support for the economy and jobs. The one thing I think we can be fairly sure of, because he announced yesterday that he's going to give up the idea of doing a budget this autumn, is that tax is not on his agenda anymore. Now, I've been saying virtually since the start of the whole coronavirus crisis that this will not be a time to talk about tax. And given that I spend a lot of my life talking about tax, a lot of people have thought that's rather odd. But let's be clear about why I said this is not a time to talk about tax increases in particular, which has been the entire focus of the debate of many on both left and right of the political spectrum. Sorry, the sun has just come out and I can't do anything to prevent the fact that I'm now sort of disappearing into considerable shade. I can find a space where I can get some shade. Otherwise, you're going to see a white blob. My view is that tax does not pay for public spending. Now, that is, of course, a position that modern monetary theory will support. And in this sense, I am a modern monetary theorist, and I spend quite a lot of time talking to those who do write modern monetary theory. And according to Randy Ray, who's one of the people who created that, I'm one of the 7 people who has contributed to the theory, particularly with regard to the role of tax within modern monetary theory. And the logic of that theory is that, quite simply, all government spending is made by borrowing from the Bank of England in the first instance. And that is absolutely clearly true. As a matter of fact, this is indisputable. If the government decides today to spend more money on supporting employment, and I sincerely hope it does, or we're going to have a massive unemployment crisis, it is not going to look in the piggy bank, first of all, to see if there's going to be more tax coming in to afford that spend. Quite clearly, there is not going to be significantly more tax coming in to support that spend, whatever they decide to do. Instead, they are simply going to tell the Bank of England, we wish to spend money. It is now down to you and the Debt Management Office to work out how you might balance the books in the sense of the literal equation of where the money comes from. And we know that the money will come from actually one source fundamentally, and that is new money creation by the Bank of England, which is done digitally by simply hitting a few keystrokes on one of those. That is what the Bank of England say they do. This year, the government deficit will be in excess of 300 billion. I have no doubt about that. And we know that at least 300 billion will be covered by QE. In other words, the actual true net borrowing by the government this year will be very small indeed. And the tax system will remain pretty neutral in the sense that there won't be any major reforms. And it will simply be contributing as it has always done, but without, in any sense, making an effort to meet the deficit spend. So tax is in this situation fulfilling another role entirely within the economy. And that role is actually, therefore, the one that we need to look at. Now, ultimately, the primary purpose of tax is to eliminate inflation by cancelling the impact of this government spending by money creation. We have pretty much zero inflation risk at present, and that is going to be the case for a very long time to come, excepting situations created entirely outside the normal economic sphere. In other words, I'm accepting the risks that arise from Brexit in the current circumstance. It is entirely possible that we will have inflation come January. That inflation will be with regard to imported foodstuffs in particular, and it could be severe if we see breakdown in food supply. which I frankly expect. So in that situation, we could have a very difficult economic situation with regard to stagnation and inflation, the crisis of stagflation, and there is nothing that tax or monetary policy can do to solve that. Only a sensible foreign policy, which allows free trade to take place, which is not what we're going to get, could resolve that particular crisis. So there is no point in looking at either tax or fiscal policy or monetary policy to solve a crisis that is politically created. So I'm going to leave that particular inflation risk aside and look at those which exist within the normal economic balances. And in those situations of normal economic balance, then we know that there is very limited risk of inflation arising unless we have full employment, unless the resources within the economy have literally been used, and then extra government spending would create inflation by chasing resources that don't exist, and therefore tax has to be used to eliminate demand in the private sector to allow public sector spending to take place if that is what the government desires. That is the role of tax within modern fiscal policy, in summary. But if that is the case, then what that does is liberate tax from many of the constraints that we previously thought existed. In other words, tax is not primarily about revenue raising, and all the arguments that go back to 1776 and Adam Smith about tax must have to be efficient and a good revenue raiser and must do so with minimum disruption to the economy. None of those ideas, which are now nearly 250 years old, need apply, because that is actually not what tax is meant to do. Tax, if it is freed from this constraint of funding government spending, is an instrument for economic change in its own right. It's a mechanism for delivering the structure of society that a government imagines. And that is literally what I describe the joy of tax to be. That is what the title refers to, apart from being a pun which everybody but my students, who are too young to understand it, seem to get. Now, when I talk about what this policy proposal is, I mean, tax is meant to reduce inequality. Tax is meant to redistribute income and wealth. Tax is meant to prevent things that we think are bad happening, in the sense of the Pigovian tax, which is a tax on bads and, of course, a subsidy for goods. So bads being carbon and alcohol and tobacco and so on, goods being education and books and other such things. So we can reprice market failure in that sense, including, of course, some aspects of environmental change. And also, tax is meant to be a mechanism for the delivery of economic policy. In other words, we choose to subsidize certain activities, such as investment in new infrastructure. Now, those are the purposes of tax after coronavirus, in my opinion. The chance that we have inflation, as I say, which can be controlled in any way by taxation, monetary policy, or anything else, is remote in the extreme, when we're going to have unemployment without intervention by the government. Well, I predict at least 6 million, and that's what Rishi Sunak's up against later today. So once we face the fact that actually inflation control is not the primary purpose, and that we don't need to raise tax to balance this equation of the government books, this argument that we need sound finance, that we need to balance the books, is complete nonsense in this understanding of tax. If we understand that, in fact, the government can simply create money, whether it's through the QE process or whether it's on overdraft through the Ways and Means account, which the government will be perfectly legally entitled to run at the Bank of England without limit as from the 1st of January, because we are not in the EU, which is what imposes the limit, then we are in the situation where we can look at tax in this entirely different way as an instrument of social policy. Now, in that context, I do think there are very real reasons to reform tax at present. And this is an opportunity that, in fact, this situation gives us to look at the whole tax system and say, is it fit for purpose? And the very obvious answer to that, and I have been running a series on my blog called Tax After Coronavirus, is that the tax system is not fit for purpose. One of the most obvious examples that I can put forward is a piece of work that I did earlier this year, which has been particularly popular with the Daily Express, of all people, who picked it up frequently. which is to show that if you actually look at the increase in wealth in the period from 2011 to 2018, the period was chosen deliberately to exclude the immediate global financial crisis, where, of course, everything went wrong fundamentally first time round, as it's doing again now, and to look at income over that same period of 2011 to 2018. In fact, the increase in wealth was nearly 50% of the total income earned over that period. And I'm talking about the UK, something like 13 trillion, of income, and something like 6 trillion of increase in personal wealth over that period. Astonishing figures if you look at the wealth data. And yet, if you look at the effective tax rates on those two sources, whilst that on income is around 30%, that on wealth is around 3%. Combining to create the overall average tax rate in the UK of around 33–34%. And if you look at the distribution of those tax burdens, well, actually, and the sources that give rise to them, unsurprisingly, we're looking at a situation where we know that the vast majority of wealth goes to a relatively limited number of people in society. And I put my hands up. I'm clearly one of those in that bracket. I'm of a certain age. I'm a house owner. I have a pension fund inevitably at the age of 62. If I hadn't, it would be slightly worrying. I have seen a significant increase in my wealth over that period, whereas a great many people have seen no increase or literally zero increase in their wealth over that time, but have paid substantially higher income tax rates, in fact, than I do as somebody who's been on a university professor's salary for the last 5 years. Excuse me. I realized I'd need a mug of coffee to get through this. So the disparity is this difference in taxation rate of around 10 times higher on income than on wealth. And yet we have this enormous difference. So one of the things we have to look at is, do we need a wealth tax? Well, actually, yes in the long run, no in the short run. Because the reason why we have this disparity is, in fact, that we simply do not tax the income from wealth fairly in this country. We heavily subsidise it. In fact, we give an extra £1,000 allowance to savings income against income tax. We provide ISA allowances for no apparent economic reason. We subsidise wealth accumulation through providing, at a cost of £55 billion a year, a subsidy to pension contributions, which again goes largely to reinforce wealth inequality. We tax income from dividends and from rents and from other sources without charging national insurance on those, yet we charge national insurance on income from work. The consequence is that income from work is substantially higher taxed than is any form of income, even after allowing for dividend tax changes in recent years, income from investment sources. And there is a substantial incentive to therefore incorporate businesses to try to disguise self-employment, create these artificial self-employments through limited companies, to pay dividends out of limited companies, to distort the tax system to undermine its base. If we were to revise tax after coronavirus, then that has to be corrected. We simply have got all our incentives the wrong way around inside our tax system to create the future balanced economy we need. What else have we got wrong? Well, we are actually providing blanket capital allowances to absolutely any business for any reason whatsoever. Does that make sense when some of that will be given, for example, to industries that we're not keen on? You can get capital allowances for promotion of gambling. Is that a social good? Well, I would argue no, it isn't. Do we have sufficient allowances for some of the things that we need to do, for example, electric transport? Well, probably not. Do we actually provide householders with incentives to actually install energy efficiency within their household? No. Are there therefore significant changes required to the way in which we provide tax reliefs, incentives and allowances? Clearly, yes. Do we actually simply need to clear out many of the existing allowances? Emphatically, yes, because there's well over 1,000 of them. And they create an enormous distortion within the tax system. The total cost of tax allowances and reliefs in the UK is, in fact, over £400 billion a year, when the total tax collected is less than £800 billion in the current year, because it's highly likely it's gone down from previous years. So we're talking about nearly 50% of the tax take is actually potentially available if we were to review the use of allowances and reliefs. So there is obviously an agenda to decide upon whether those allowances and reliefs, the biggest of which by far is the personal allowance, by the way, but which I'm not suggesting is taken away, but which has substantial flaws in it. It may be too high. It may be wrong that it's withdrawn from people earning over 100,000 a year, and so on. These reliefs need reform. They need review. This is an agenda for tax after coronavirus. But perhaps the biggest reform that I think is essential right now is one that most people don't talk about at all. And that is the fact that we simply have our administration of tax wrong in the UK. The tax system is run by HM Revenue and Customs, which models itself on a public enterprise, on a private enterprise, a public limited company. The model is that it is a corporation. It is run on the basis that it is meant to be an efficient unit with high productivity, which has meant substantial staff cuts. It has withdrawn from local communities across the UK. It has closed most of its local offices. The number of offices is going to decline tenfold from over 150 to around 15. There will be no office in England west of Bristol soon. There will be no offices in Scotland north of Edinburgh and Glasgow, which means that for people in Shetland and Orkney, for example, their nearest tax office could be 350 miles away. There will be no tax office nearer to the port of Felixstowe, which is one of the major import-export points in the UK, than Nottingham. So there will be no tax officers on the ground to deal with tax issues, which is clearly going to be an issue after Brexit, and so on and so on. We have a tax administration that has lost touch with reality, which is out of touch, therefore, with what is really happening in the business community, what is really happening in people's lives, and doesn't understand how to address those issues. I believe as a consequence it has significantly missed its targets with regard to tax collection. I believe the tax gap, the difference between the theoretical tax yield that the government should take on the basis of the tax system that it has in operation and the tax it collects, is wrong, and that we need to reappraise how we both measure that and how we tackle it with regard to tax avoidance, but in particular with regard to tax evasion, which my research shows to be a problem at least 4 times and maybe 5 times bigger than tax avoidance, which gets all the attention, where evasion is the real issue that we need to address, and where we have tax officers that are simply ill-equipped to either identify or address this problem if they ever find it. So the tax administration itself needs to be reformed so that it actually reflects the needs of society. Tax after coronavirus needs to reflect the fact that society will be different after coronavirus. I sincerely believe it will be, because I think we cannot go through an experience like this and not change. And I believe it will be, in a sense, more collective. We have genuinely been in this together. The coronavirus has, frankly, not been very discriminating about who has it. And I've had it, and I can warn you, if you haven't, try to avoid it. It's not fun. It knocked me out for over a month, and I was not hospitalized by it, but I had all the other symptoms except losing taste. And it is not a fun thing to endure. So we need to consider how we can get around that, how we can live together as a community, and how tax can reflect that. Now, this is an entirely different approach towards tax from that which we've had to date. It is simply not about how do we maximise revenue to balance the government's books, which has been the agenda for the last 40 years. The wrong agenda, in my opinion, for those 40 years, but very definitely the wrong one for the period to come. So we need to think again. Now, that's why I've been writing about tax after coronavirus, why I've been suggesting the types of reforms I'm talking about here, which are social policy reforms as much as they are tax reforms, but which are capable of delivery through the tax system. That's my belief, that we need this as a direction of travel. I've now spoken for 20 odd minutes. I would love to hear questions about the points I've raised and have discussion upon them, because I think that's the best use of this sort of meeting. So I pass you back to Henry to chair a session of questions and answers, hoping that there might be some.
Thank you very much, Richard. This is a huge agenda, and you're always a great and convincing advocate for it. Now, everyone has got an ability to raise questions and also upvote questions that other people raise, so that we hopefully use the time as efficiently as possible to answer the questions that are most popular and people care most about. I would like to start with a question, which is, there's obviously a battle at the moment to get anything discussed beyond COVID and Brexit. And, at the best of times, trying to get a social agenda into the tax space is challenging. What keeps you going in terms of the fact that you think people are listening, or there's a potential to get some leverage, or get some purchase with this agenda?
I'd love to know what keeps me going, because I wake up every morning and I write 2 or 3 blogs before breakfast. So something keeps me going, and it's not Weetabix, because they come after the blogging. I have this enormous desire to see a better world. I don't think there's a coincidence that I began my campaigning career at the time that children arrived in my life. I guess it did change my perspective. Before I had children, I worked largely in the private sector, largely in commerce, and was a senior partner of a firm of accountants. And since I've had children, I gave up a secure income and everything else to actually work for what I see their future to be. I believe we can deliver a better future by changing tax. I believe that we can reshape society to deliver for the long term, which is, of course, why I also do a lot of work around the Green New Deal as well. I don't see the issues as unrelated. I see them as intimately related, in fact, although I don't actually see tax as a major mechanism for delivery of environmental reform, curiously, and some do. So my motivation is to create a better, fairer society, in which there will still be a mixed economy. Let's be clear about it. I have, I'm frequently accused of being a Marxist. Those who say so clearly don't understand Marx. And I've worked as a professor of political economy for the last 5 years. And I think I have some understanding of Marx. I don't claim to be an expert, but I'm certainly not a Marxist. And sometimes I'm accused of being hard left. And I reckon I might have been about on the right wing of the Labour Party in 1976, the year I went to university, and haven't changed much since. I mean, I believe very strongly that we need to find a way in which government and business can interact to meet the needs of society, and happen to think tax is a tool that helps us do that. My problem, and I think I share your view, by the way, here, Henry, is that actually so many people aren't willing to look at tax in this way. And I have this problem at the moment with many of the left of centre think tanks who are looking at tax. All they want to talk about is how to raise revenue. Well, that makes absolutely zero economic sense right now, because every penny of revenue that is raised right now in taxation takes money out of the economy, reduces demand, and the thing that is of greatest shortage in our economy right now is demand. I mean, I know we've had Eat Out to Help Out, and look what a great success that's going to prove to be. That we are still seeing businesses which are fundamentally short of demand, cannot therefore function at a normal operating level of profit, cannot employ people, hence the need for Rishi Sunak to interact today. And my belief is that we have to improve the understanding of tax in society. And so that is my great motivation. Tax is not taught well at universities. It's hardly mentioned on economic courses at all. If it is, it's simply seen as a mechanism to fund government spending, which it isn't. Modern monetary theory isn't well understood. And frankly, the left does not understand the role of tax. I mean, at the moment, we've had a lot of rather excited comment amongst left-wing commentators about, oh, this is the great opportunity to increase tax. And my answer has continually been, no, and I've had to try to restrain people. And by and large, actually, I think I've been successful at restraining people's enthusiasm for tax increases, but I haven't yet been able to get them to understand that actually the balanced book agenda, for example, which I have to say, 2 of our major left of centre think tanks genuinely seem to believe that we have to balance the government's books, which absolutely petrifies me that there's so little understanding of how government operates and how the revenue cycle operates and how the sectoral balances operate within the economy, that I'm determined that that is the issue that I'm going to try to see some reform on. So that's my motivation.
But getting people, is there an audience, because you said the left of centre think tanks aren't really on this. I mean, is there anyone out there who is sort of taking this up?
Look, lend me a wall and I'll bang my head against it. And I mean, let's be clear. I mean, I've been used to this idea of banging my head against a wall for quite a long time. I'm continually told, oh, if only you were more mainstream, you'd be more effective, Richard. And I've been told that now for nearly 20 years. I was told that I wouldn't transform anything about tax havens unless I was more mainstream. I was told that nothing would happen with country-by-country reporting unless it was more mainstream. I was told the Green New Deal was a complete fantasy and nobody would ever pay any attention to it. And now it seems to be the answer to everybody offers to every economic crisis that we've now got. And so I've been used to being told 5 years in advance of an idea being adopted that I was completely mad to promote it. So I just presume my job is to be out there being told that I'm really a bit bizarre and off the wall, promoting ideas which are at the present point of time, unfashionable, incomprehensible, and never going to happen, to only then discover that a few years later people think, well, that wasn't such a bad idea after all. I can live with that. I don't mind being told this, so long as the change happens. And so far, I mean, and I'm not, frankly, making any gross claim for myself. All I do is just promote ideas which seem to be sensible. And thankfully, so far, the track record is that quite a lot of people subsequently agree they might be, in some form or other, not necessarily exactly as I predicted. And I believe that will be the case here. I think this is what is going to happen. And I forgot to turn my phone off. So I will just get rid of the phone call and leave you to ask the next question.
Right. So are you saying that tax is a social justice issue and not an economic one?
I don't see the difference between those two, is my answer. I think there is no differentiation between social justice and economic justice. They are one and the same. You can't have social justice unless you have a fair economy. Now, fair does not mean an equal economy. We are never going to see a world where everybody earns the same thing. Well, hopefully, where I will never see a world where everybody wants to do the same thing and work in the same way and so on. That is not possible. People are different. If life has taught me anything, it's that we're all very, very odd people. Every single one of us is odd. And thank God for that. We want this difference. We want to value this difference. Being a parent, I mean, God, I look at my two children and how on earth did I have such two different beings come from one person? I thought I'd turned the phone off and clearly I hadn't. That shows how in control of my phone I am. I can't even control that. I mean, this time maybe it'll turn itself off, maybe it won't. But, so I don't see a difference between the two. I think it's a false dichotomy to say, oh, the economy has to be got right before we get social justice. No, social justice is implicit in this. If we have a fairer, more equal society, we will also, by the way, have more demand in society because we will have redistributed wealth from those who don't spend, which is a critical point to make, to those who do spend, who are those on lower income. There is a very valid reason at this point in time to actually do. Finally, I turned the phone off. There is valid reason to do redistribution, and that is simply to put money in the hands of those who will spend to create demand. So we have to see the two as being linked to each other.
In terms of reshaping the tax, then, for fairness, one of the issues you raised was the sort of subsidy for capital income, basically. But you said that you don't need a wealth tax, at least in the short term, but in the long term. So what? I know you said you could do some other things in the short term. So what would you propose in the longer term on the wealth tax?
Well, first of all, let's get rid of inheritance tax, which makes me very popular with the Daily Express, because they believe that, and I happen to share that view too, simply because it just doesn't work as a tax. It has all the wrong PR. It appears to be at 40% when, of course, we know it isn't. It appears to be very brutal, therefore, at a high rate, which is just makes it unpopular. In fact, only 6% of estates have any inheritance tax charge, and there are substantial, of course, allowances available before any charge is levied. But it is unpopular with those who have seen substantial increases in their wealth. Unearned wealth, let's be clear, by living in houses in London. I moved out of London 20 years ago, and I often look back at the house that I sold then, which was worth 400,000 when I left, and is now worth about 1.5 million, according to Zoopla or whatever it is. And I think, well, if only I'd kept it and rented it out, I'd have made $1 million over the last 20 years, 50,000 a year, maximum tax rate 28%, vastly lower than that which I would have earned by working. Frankly, why didn't I just literally move out and keep the house? Well, I didn't. I sold it, and that's life. I'm not worried about that, but it is unearned income. So what do we need to do? I can't remember which direction. What
would be a wealth tax?
What I would actually do is, first of all, get rid of inheritance tax. I would have capital gains tax on death, including a capital gains tax charge on private residences on death. Now, that would be on, of course, second death in a spousal relationship or any form of civil partnership, and it would allow for carers, as the existing system does with regard to property transfer on death. So there would have to be provisions for that. And it would be a lifetime charge. In other words, it would be over your capital gains arising on your principal private residences over life. And actually, most of us do not have that many principal private residences, and we've had to nominate them during our life, and the revenue know what they are. And it's easy to trace what you bought and sold your properties for, because there are stamp duty records for every single living person alive now to show what they bought and sold their properties for. This is an easily verifiable audit trail to create a tax charge on death with regard to capital gains, but also on other things. Why do we give completely tax-free basic allowances for inheritance tax with regard to business property, which is widely abused, and agricultural property, which nobody can understand because there appears to be no economic benefit of either allowance? So we need to actually reform tax on death and have a revised capital gains tax on death rather than an inheritance tax charge. Do we need
taxed on your capital gains when you die, effectively?
Yes, which at the moment are tax-free.
Okay.
I would have to
the only wealth tax you would propose, is it?
A wealth tax, I do see a role for a wealth tax, but actually it would be on substantial wealth. I'm much more interested in actually making sure that the tax rates on income and wealth with regard to current year are equalised, so that capital gains tax rates should be equal to income tax rates. I would be cutting the allowance for capital gains substantially, because at present a person who has capital gains effectively has 2 personal allowances in a year, whereas a person who only has income from work only has 1 personal allowance in a year. The income allowance, the capital gains tax allowance is effectively provided to couples because it's easy to arrange that, whereas it is not provided in that way with regard to earned income. I would be looking at an investment income surcharge on unearned income in the UK, which would be 15%. For those who are old enough to remember this, we did have one of these until 1985. It was 15% over the income tax rate on unearned income over an allowance. I would suggest that allowance would be around $5,000 a year for admin purposes mainly, to be blunt. But you've got to be pretty rich to have unearned income of over $5,000 a year now. You would have substantial asset investment to make that rate of return in the current market. And that would be the equivalent effect of national insurance, in my opinion. So it would be there to provide a contribution equivalent to national insurance. And these would be much more important than having a wealth tax. They would raise a lot more revenue than having a wealth tax too. I mean, a wealth tax at best, and I've looked at the data on wealth, by the time we take out of consideration houses, which it's very hard to charge a wealth tax on, pension funds, which is very hard to charge a wealth tax on because you don't have access to it, ISA funds, which have already been tax incentivized, which are therefore very hard to charge on. There's only actually, by the time you get down to it, around 900 billion of wealth, financial wealth, which is subject to a tax, potentially subject to it. What are you going to charge? 1%, 2%? We're only going to raise peanuts in tax terms on that. I could raise more money by eliminating the tax relief on pensions in totality overnight than I could do by introducing a wealth tax. Now, I'm not suggesting we do need to eliminate all the contributions on pensions, but I'm trying to point out that actually a wealth tax is not a very efficient or effective mechanism. So we are better off looking at taxing the income from wealth a lot more effectively and not more fairly to create a more balanced society now than worrying about wealth tax. If we have a wealth tax, where would I be looking at it? I wouldn't be probably starting a wealth tax until at least 2 million of assets, and possibly higher than that. And we'll be looking at a fairly modest rate, a starting rate, 1% and maybe 2% over 5 million. I believe that's viable. It's mainly for social purposes, though. It's an indication of our intention to redress the balances in society rather than as a revenue raiser. The revenue raising would come from transforming the taxation of income and gains in the current year, and that would be significant.
Okay, thank you, Richard. Let's move on. I'll tell you what, I'll invite Nicolette up because she's got a couple of questions. If you can put your camera and microphone on.
How does this work? I'm going to be confused now.
1 second, Nicolette, are you there? If you put the camera and microphone on, there you go.
Okay.
So you had a couple of questions. Would you like to ask them?
Let me see if I can find them now. Yeah, I wanted to understand your thinking around decentralising tax offices out away from London, out to the regions, into the localities, as you put it forward as one of your forms we could do. And whilst I can see some some benefits from actually getting, if you could actually get those tax officials into the communities where they can see the problems in the context and be empowered to respond to them, then that might be worth doing. But in the absence of that, when we live in a digital age and you can send communications right across the world, and taxes are sort of a very detailed number-based discipline. Sorry, my husband's just walking up the back. He's such a big benefit from decentralisation.
My answer is yes, and there are a number of reasons. One is that actually I see tax as being the consideration in the social contract. That contract that we all, I think, do have between us and government. And we are bound to government through this system called taxation. We vote because we pay tax. There's very strong evidence that actually paying income tax is a significant factor in voting. And that is one reason why I have had major reservations about increasing the personal allowance to eliminate so many from tax, because it does seem to leave people alienated from the system who don't vote. And therefore, I believe that the fact that we have a tax system should be seen to be operating inside our communities. But most importantly, I know how hard very many people find tax. I mean, I stress the point, I was senior partner of a firm of accountants. I know how petrified people are of taxation. How literally terrified of receiving emails and other communications from the tax authority they are, and how much support they need to get tax right. I also know that a lot of people can't afford to get that support. Remember, the average income of a person who is self-employed in the UK at present is £11,000 a year. That is less than the minimum wage. They can't afford accountants, and there are 5 million people who are self-employed, the vast majority of whom, if that's the average. Now, well, I'm assuming they're declaring their income correctly, of course, but yeah, and there is evidence that on average 42% of the self-employed, this is an HMRC figure, underdeclare their income, and I accept that point. But even so, not by so much that it overall makes them rich. They might be earning 13 or 14,000 a year rather than the 11,000 they declare, but they are not well off, and they need support and can't afford to get it. Now, I believe that if we have a tax authority, it has to be seen to exist in our communities to make it socially acceptable. Again, this is the point where I make economic efficiency and social interaction are simply not choices and alternatives. They are the same thing. The tax authority has to exist in our communities and be seen to be there for it to have the right relationship. And it has to be able to help people by literally having call-in, drop-in centres. Yes, I know face-to-face isn't too popular right now, but I'm presuming we'll get through that stage. I do believe we will eventually, where people can go to seek help. And of course, the tax authority is also dealing with vast numbers of benefit claims now as well. And that also needs to be available to help people out. Universal credit is an absolute nightmare. I've helped some people make universal credit claims this year because literally they've seen their incomes disappear. And they've had to claim. And these are the people I've helped, all of them graduates, all of them can be completely baffled by the system and the demands it makes of them. We must have people in the community who can help, and those people should be tax officers in HMRC offices in, frankly, every town and city in this country, as a service to the community. They call us customers and they treat us as alien beings. The attitude should be that we genuinely are in this together, working together to make the system work. And the revenues attitude should be to make sure we pay the right amount of tax, which does also mean they should be telling us, by the way, you could claim an allowance for that. Not just we can tax you more. So an entirely different attitude towards tax is what I'm talking about.
I was playing devil's advocate in asking that question because I actually completely agree with the way you I just wanted you to spell it out. But if I can just quickly go back to my first question, which was saying that every tax generally is about making incremental changes to this particular tax and that and the other. And I got turned off analysing tax quite early on in my career. I remember I think it was Jim Merlis was saying with the second best theorem that if you can't get tax perfectly right, there's no second best solution because it's all so messy. And whenever I look at sort of tax things, and there's so many different sort of policies and exemptions, and it just strikes me as you're sort of once tinkering around the edges. Whereas, as we were hearing in the first opening lecture in this series, what we really need is systemic change.
But not in the direction that I have to say that Jim Mirrlees would have taken us. I have to say that the Mirrlees review was pretty disastrous, in my opinion, with regard to tax, because his simplifications would have been deeply regressive with regard to tax. For example, much higher rates of VAT and much less tax on direct taxation would simply have resulted in a redistribution of wealth upwards and an increase in poverty in the UK without any apparent compensating measures. I love the chapter on wealth taxation in the Mirrlees review, which basically begins in rather typical IFS fashion, and I'm not a big fan of the Institute for Fiscal Studies, if I'm completely honest with you, because they don't seem to understand tax, which is kind of odd. When you would think that was their job. They don't understand macroeconomics or tax, I should add. They just said, why would you want to tax wealth? End of chapter, in effect. Because they just don't believe that wealth is a tax base. Well, actually, in the real world, things are deeply messy. And again, rather as I would say that all of us are odd in some way, and that's true and a merit, it's not a criticism at all. We should have those distinctive characteristics. To have a tax system that deals with the oddity of the real world, the complete variation that we see across the range of human behaviour, we will have a messy tax system, whatever we wish for.
Yeah.
What we need to do is find the right balance between mess and systemic objective. I think we've got that wrong at the moment. I think we could very definitely simplify the tax system, and we could add in some new and beneficial complications. For example, what I'm talking about with regard to taxing income from wealth. But we've got the balance wrong, and we need to find a new balance. But the result will still be a messy tax system.
I think we're stuck with a messy tax system, but I think the challenge is also to find the points of leverage within that messy tax system where we can have most impact. So, and we're touching on that in this discussion. Well, is it a wealth tax? Is it, or whatever it is? But I think that's the challenge.
Yeah, I agree with you. And my personal belief is it is rebalancing this equation between taxation of income and wealth, but wealth tax is a small component within that. It is actually current income that actually matters. And there's another good reason for that, because let's be honest, it is very hard to pay tax without having cash available to you. And one of the problems of the wealth tax, particularly if you put it onto lower level of income, and I've already pointed out, it's very hard to charge it on houses because there isn't a cash flow from most houses. And so you then end up with the enormously messy situation of somebody who's living, the proverbial, it's always put this way, the proverbial, normally older single person who's often a woman who's living in the old family home. It's a 5-bedroom house because they've lived there since 1958, and she doesn't want to leave quite reasonably and has no means to settle a wealth tax, but the property's now worth over 2 million quid. That is obviously going to give rise to messy issues. So we do, to some extent, need to accept the fact that we have to follow the cash when we come to tax, because it has to be paid. And we can do roll up of liabilities in some wealth tax situations. I accept that. But most of the time we have to look at the fact that ultimately, tax is about settlement of a cash liability, and therefore we have to make sure that there is that capacity to make payment.
I'm going to leave the stage now, but I just want to thank you for that final insight, because I sort of lost track of the fact that actually cash is king when you're dealing with tax.
It is important to remember it.
Brilliant.
Okay, thank you very much.
Very much. We've got now a very different sort of question, which is interesting. See what we make it. What can we expect the impact of China to be on the UK economy, particularly if we adopt a strong MMT approach? So presumably that's if we create a reasonable amount of money to get the economy going. So the impact of China on the UK economy.
I'm not sure. I'm actually going to pick up the point about the strong MMT approach and then come back to China, if I might.
Okay.
And there's a reason for that, which is there is no such thing as a strong MMT approach.
Okay.
We're already doing MMT. As a matter of fact, it's there. And we do already create vast amounts of money. I mean, there is 735 billion of QE ownership of UK government bonds already. And the last time I looked, which was last night, because I'm doing work on this at the moment, the government owns 18 billion of corporate bonds as well. So we've got nearly 750 billion, £750 billion of money creation already in the UK economy. Frankly, to argue that we haven't got an MMT approach, that we aren't actually creating money to fund deficits at present is absurd, because we clearly are. MMT describes what is. The only thing that I would call a distinctive MMT approach over and above that, which is already happening, is that MMT would argue that we should have a job guarantee as an economic stabilizer. And the stabilizer effect would be to say, if we guarantee everybody a job, if everybody can actually work, you will drive the economy towards full employment. You will drive the economy to the point where you actually are raising an optimal tax revenue from the economy anyway. And in fact, the economy will automatically be balanced by creating full employment, which we clearly haven't got. So the approach that MMT would be putting forward is that we should actually be looking at how we create a job guarantee today. And that would not be what Rishi Sunak is doing, which is to guarantee existing jobs, but actually to look at how we create new jobs on top of those and to spend to achieve that goal. And the argument would be we could do that. How does China fit into that? I have to say, I don't really understand that there's any relationship, because first of all, China already fits into this equation because we deal with it every day. Does MMT substantially change the way in which our economy functions? No. Does it change our exchange rate? No, because quite clearly markets have already accepted the whole idea of QE and the idea that we can do it. In fact, if anything, it's provided stability to exchange rates, because the opportunity for markets to attack the government through, for example, buying and selling government bonds as a way of attacking the exchange rate mechanism has simply disappeared, because they know they can't do it because the government can repurchase its own bonds and neuter any threat. The only thing that fundamentally matters between us and China is relative changes in productivity. That is what defines exchange rates and the balance of trade. Do we send jobs to China because they have higher productivity than us or lower labour costs than us? That is the question that matters. The whole point of MMT is to get as many people to work as possible at a fair wage. And it encourages the creation of economic efficiency around those jobs, i.e. it's trying to find a productive use for the labour we have available in our economy. Is that going to create a stronger or a weaker economy? Is that going to leave us imperiled because we're going to reduce productivity by putting people to work when they are already here? Let's be clear. The choice to putting people to work is not let's cull them and let's get rid of them. They will still be in our economy. We are not talking about microeconomics here. We're talking about macroeconomics. A business can get rid of people and they've gone. In the macroeconomy, you get rid of people out of employment and they're still there. It's the shocking truth that the Treasury doesn't recognise. They've still got to be paid. Although actually there is no government department, we now realise it is responsible for ensuring there are food supplies in the UK, which is going to be an issue of interest come 1st of January, but we won't worry about that one today. So actually getting people to work in exchange for their sustenance, which is the goal of MMT, without compulsion, in other words, offering jobs to people without having a workfare scheme in exchange for benefits. So work would always pay more than benefits, by definition in this scheme, is the goal. How can that leave us in a worse off position vis-a-vis China? I just don't understand. Unless we're going to say we're going to create non-jobs. Now, what is a non-job? I always remember when Jeremy Vine once said to me on Radio 2, we were live on air, Richard, what are you going to do about non-jobs in government? And my reply to him was, well, you work for the BBC and are paid over $500,000 a year to spin records. I reckon that's pretty good going as a non-job. So, how are you going to define these things? I thought I'd never be invited again. I was back in the studio 10 days later. The producer invites the guests, not Jeremy Vine. The point is, what is a non-job? Is caring a non-job? Is education a non-job? Is the NHS a non-job? I think that one of the things that coronavirus is proving to us is that actually what we consider to be of value is going to change. And whilst we may still trade with China to substitute for our work in industry, which is still going to be relatively non-productive compared to theirs, in very many areas, we have so much to do that I just don't think there's going to be a risk.
Great, thank you, Rich. Now, last question on quite a big topic, that's land value tax. John, I invite you up to ask your question.
Well, yes, just simply what I've said. I've been sort of an advocate of the land value contribution to the public revenue for some time on the basis of Henry George, etc. And whilst you've already expressed some of the difficulties with an older owner of a 5-bedroomed home and not having the cash flow to pay anything, nevertheless, as a direction, as an evolution, surely the long-term solution is to begin to put the burden of public revenue onto some sort of land value collection. And it isn't that the direction we ought to be going, although I know it's politically explosive, as it were.
Thanks, John.
How do you see that?
Given that we told us about cash, Richard, you've only got about 2 minutes or 3 minutes or something.
Okay, total government collection from property taxation at the moment is a bit over 70 billion a year, might be heading towards 80. That's split almost equally between private property council tax and business council tax, which are different in their direction and how the funds are used. So roughly 10% of taxation at the moment is property-based in some way. We know full well that the business council tax system does not work well. We know that the current council tax system is deeply regressive and fundamentally unfair as a consequence and in need of desperate reform. Do I see any prospect of raising taxes on property to actually correct for this? No, none whatsoever. I'm not a Georgist, and I think it's actually completely bizarre that anybody can think that land value tax is the solution to this problem. It isn't. There is no cash flow. Property does not generate cash. It does generate rents, and they should be taxed more. I've just said that. It does generate capital gains, including on development, and they should be taxed more. I've just said that. But to actually presume that a person who is living in a property should therefore pay, because they live in that property, a tax, which may be sufficient to wipe them out economically, is quite absurd. It simply is grossly unfair. It will break down society. And it does not in any way reflect the economic activity and the role of tax that I've outlined as a social policy instrument. It does not protect harms. It does not redistribute income and wealth. It does not encourage economic activities of the type that we require. It does not, therefore, perform a social function. I am absolutely in favour of a land value tax, having said that. Yeah, I would like a land value tax to replace council tax because I think it's a fairer tax than the one we've got, but there would be a very low rate on very low value properties, or zero rate on very low value properties. I am absolutely convinced that in a country like Scotland, which I suspect will be independent within a few years, a land value tax is one of the ways to deal with the problems of the massive land ownership inequality in that country, which has to be dealt with. And I see a role, therefore, with regard to land value tax in that particular situation. But overall, can it provide a mechanism to A, beat tax abuse? No, because tax abuse will go on even around with land value tax. B, can it provide a source of revenue of 800 billion a year out when it only provides 10% of total revenues now? No, not a hope in hell is my technical answer to that one. Not unless you're planning for mass poverty in the UK and a breakdown in the social fabric of society. Otherwise, it's great. I love it.
Not my story. That's yeah. So okay, thank you for that. That's very helpful to see.
Sorry,
that,
but I just don't agree. I never have. But as a replacement for the existing taxes, yes. Can I just be clear about one thing? I'm not a golfer, but I played just enough rounds of golf to know that if you're going to play a round of golf, you do actually need 14 clubs when you go out, which I'm gathering is the number you're allowed in a bag. The land value tax argument that we can survive with one tax is equivalent to arguing you can go and play a round of golf with a sand wedge. You can't. Nor can you run an economy and a tax system without about 14 taxes, which happens to be about the number we've got. So land value tax is a very useful sand wedge in the bag, but it cannot replace a driver, a putter, and all the other things that you need as well.
Thank you.
Brilliant. Thanks, John. I will just remove you from the stage. So, Richard, have you got any final words before we wind up?
Yeah, come and read my blog every day. There'll be more to come.
3 a day.
I mean, and I make the point for a good reason. This is a dynamic issue, and it is changing rapidly. And I do believe that, I mean, you asked me right at the beginning, what's my motivation? My motivation is that this has changed so much. Over the 17 years that I've been pretty much involved in tax campaigning, John Christensen and I were the first full-time tax campaigners as far as we know in the world. And we're both still in the game now. The arguments have changed, are changing. And at the moment, they're changing a great deal, particularly around this issue, for example, around what is the role of tax and do we need tax increases and wealth tax, etc. So I think it's an area which, to me, is fascinating. It is fundamental to the way in which we're going to organise our society, and is therefore worth spending time thinking about. And that's why, yeah, I do write those blogs every morning, not all of which are about tax, I have to admit, but some are, and the integration of tax into the economy is fundamental. So, yeah, keep up to date with it. Join the debate.
Well, thank you very much, Richard. And I think you're absolutely right. This is a crucial and fascinating area, and I've certainly learned a lot. So we end our sessions this morning, but I think we have Paul Stephen here from Bristol University Press, and he'll be around on a table. I think there's a Paul. I hope that is Paul Stevens. I might just invite Paul to come up to the stage, because he's interested in talking to anyone who's interested in writing a book. I did Paul. I wasn't sure it was absolutely you, because you hadn't put your surname on.
No, and thank you very much. Yes, I'll be hanging around for a little while afterwards. I was invited to make myself available for anyone who wants to learn more about what we're doing at BUP and to potentially discuss some ideas. So hope to catch up with some of you soon.
Right. So look out for him on a table. He's got Paul, his name, P symbol, and you can just move to his table by double clicking on the table. You'll also see at the bottom of the screen, if you pull the screen up, a link to Bristol University Press, where you can find out more about Bristol University Press and what it does and what it publishes. So with that, I'll end the presentation scene, and obviously do stick around and talk to people on your tables. We're open for as long as we like. Okay, thanks very much. Cheers.
Thank you.